varies by company. I mean, from our perspective, the ones that are best protected are truly companies like a Nike, where when you look at what they're actually importing into the U.S., it's under 10% to China directly. Vietnam is a much bigger market for them from a sourcing perspective. So they kind of stand out as an outlier. The companies that have more immediate impact, Foot Locker has a decent private label business. We do believe a decent portion is sourced from China directly. And then as you look across outside of athletic footwear, it's companies like Steve Madden and G3, which have a disproportionate amount of their production, well over 60% in China.
Wow. Okay, so let's talk Foot Locker right now, because obviously the earnings were disappointing, but it's feeling another leg lower based on the trade wars, Erinn. And I'm wondering how much of this is the terrible quarter, how much of this is the trade war, and is this warranted? 17% decline in one day.
Sure. So I do think the majority of their decline today is much more on some of the structural challenges of their business. When you look at what's happening in the athletic market overall, it's still a really healthy market. Just more and more of the trends are happening and the transactions are happening on DTC. So vendors like Nike, like Adi, that have really strong
consumer.
Correct. Mm-hmm. And so have strong online businesses and can engage consumers that way. And it's really putting pressure on more of the traditional retailers that sell those brands. So I think at the core, that's what's driving the majority of the decline. Also, the tariffs don't help, the tariff rhetoric. I do think that's probably 4% potential incremental risk to numbers that's not in their stock today.
You've got a hold on this. You cut the price target down to 33. It's now trading at 34.86. Why not put a sell on it?
It's a good question. Look, the stock has really come in quite a bit. I think we're kind of waiting to see if they can have any momentum in the near term from a product perspective. On the conference call, they were pretty positive on the third quarter. They maintained their guidance up mid-single-digit comp for the third quarter based on what they're seeing down the pipeline. We're going to track to see how consumers are responding to that newness at retail and if it makes a difference. But our longer-term bias is a little bit cautious at this point.
In your model and your EPS estimates for Foot Locker, Erinn, do you take out, or what is the impact of that private label business in China? And if they have to pay tariffs, then what happens to that?
Sure. So we took our number for next year, which you'll see more of the impact for, to 478. Our perspective is that if we move to 10%, or I guess we are moving to 10%, and if they can't mitigate that, it's probably about 4% decline from earnings from there. So that's probably, still to come. And it's not in their estimates at this point, nor in our model.
In your top stock in your coverage universe?
Our top stock, we continue to like Nike and VF. Those are the two names we'd be looking at for safety in this kind of turbulent times.